Here we are. It's early May 2021, 14 months into the pandemic. My business partner, Mr. Christian Matthews, welcome. How are you? Love your hair. Looks great.
Doing well. Hair's good. Yeah, doing well. It's nice weather today. So hoping
What did
for
somebody say the other day? It's very Christian Slater, 1980s, Tom
yeah.
Cruise, right?
It's kind of like got the feathering going. I'm bringing the feather back. It's coming back.
I feel like we could ramble on about nothingness forever. So let's jump into the stats. Maybe we should just start anecdotally. What are you seeing in the market right now? Houses, condos, rentals.
I'm seeing. I mean, hey, we still have low inventory. That's we're not disputing that. But I am seeing a little bit of a pullback on both the freehold and the condo market. I think it's a combination of just people kind of being, tired of the lockdown, maybe taking a break. I think, the days of 10 plus offers, most part, I'm not seeing that. I'm seeing maybe 2, 3 offers, sometimes even no offers, kind of people being scared to jump in and worried that it might go too high. So I'm seeing some properties, not sell an offer date and then relist the next day at market value. So I'm seeing a little bit of, I wouldn't call it a breather, but a little bit of a pullback on the buyer side.
Yeah, I'd have to agree with you. I mean, we had a company meeting just the other day, and backtrack 6 weeks ago, it was multiple offers, 15, 17 offers on a house. Condos were getting multiple offers left, right, and center. And now what we're seeing is a lot of that. And we've talked about this. We talked about this 2 months ago. When the media starts picking up and telling everybody that property values are 20, 30, 40% overvalued, whether you believe it or not, whether you believe in the long-term value of Toronto real estate or real estate in general, wherever you're buying, we're talking about the downtown core. It's hard to jump in. And, there is right now this fear of missing out, but also a sense of rational thought going into the market where it's like, I don't want to spend $300,000 more than the last comparable sale. So with that being said, let's dive into the statistics. I know that's what people are here to talk about. So monthly market stats, again, we're focused primarily on the downtown core. So that's all we're going to talk about. We do have East End, meaning Leslieville, Riverside, Riverdale, East York pocket. Christian, you've got a lot of stats and we do a lot of work over there. We also have some West End stuff as well for those of you looking High Park, Junction, and whatnot. So this is where we can start right off the bat by saying there are many realtors are talking right now about these statistics right in here. When you look at where we are this April over last April, yes, statistically speaking, the number of sales are up anywhere from, 316% to 450%. But that is not representative of the market. That's comparing this year where, people are back out, even though we're in a stay-at-home order, they're still going around looking at houses. And you're comparing it to this time last year where I know it's hard to believe it, but this was lockdown 1.0. Do you remember staying at home? Do you remember not, for me, it's like being concerned about leaving my house, or are we supposed to spray down our delivery food? How do we handle this? And where we are today is not at all that type of a situation. We're moving around cautiously. So these numbers are terribly skewed. And over here, like the number of new listings versus active listings and days on market, like if you were to look at this without some context or without somebody giving you some background, they would be totally, you would think that every property in Toronto is selling for $7 million. $7 million properties are selling for $50 million, right? Like, this is ridiculous. So let's dive into this downtown core and the stats. And today we're gonna put everything together. We're gonna talk low rise. We're gonna talk high rise. So when we look at average price growth, we're comparing this April to last April. Yes, sales values are up across the board, anywhere from 18 to 38%. If we look at the 3-year, the 5-year, and the 10-year average, you can see that these numbers are a little bit more in line with, let's call it reality. Yeah. So don't read too deeply into these really short-term month, April 2020 versus April 21 stats. When we start looking and smoothing out these fluctuations at the 12-month rolling average, these numbers make a lot more sense. You can see that detached homes are up 10% when taking into consideration all the sales over the last year. Semis up 9.6%, townhouses up 2.2%, and condos down 1.8%. And I think that is very important, Christian, we talked about this earlier, but these numbers being as strong as they are, especially for condos, really is is a testament to how strong the condo market has come back over the last 3 or 4 months. Would you not agree?
Yeah, and I think you have to remember when the lockdown happened last year, the prices didn't fall for condos, right? That kind of we saw that the condo prices start to dip, starting September to December, and to come back, like you said, to come back to where we are today. I mean, again, it's resiliency in this market is just incredible, and the way the condo market has come back that quickly is fantastic.
Yeah, last month we talked about where that opportunity window to buy was. And for condos, the surge in inventory happened from last summer, July, through the end of November. Then December, January, and February, you saw all of that inventory erode away, which is why prices started to rebound in February and March. And now we're in a situation where it's like, yes, we're still seeing some big sale numbers, but we're also seeing a little bit of hesitation from people who are just like, maybe I shouldn't be getting involved in this insane bidding war. So we're not saying that they're going to stop. It's just that I feel as though there is some caution being brought forward by the buyers. So graphical representation of when the pandemic began is right here. Seasonal fluctuations are normal. Detached, semis, townhouses, which townhouses, again, really taken off. And again, I think you have to think about the demand right now. The demand is for more space, which is why townhouses, they can get skewed because you can have small townhouses that are 500 square feet put together in the same category as townhouses that are 2,200 square feet. So this huge, upward trajectory of townhouses may also be representative of the fact that some big townhouses have come to market and are selling now vigorously. Like, people want more space. We know that that's what's happening throughout this pandemic. So when we look at sales activity, this is what we made reference to earlier, which is just like, these numbers don't make any sense. You're comparing apples to oranges. Actually, you're comparing apples to rubber boots. Like, it's not even the same, right? Meaning where the market was last year at this time versus where it is today. When we look at the 3, 5, and 10-year averages, we can see that sales activity across all categories is up substantially, but not to these same ridiculous numbers that we saw.
Yeah, let me just jump in there, Beef, for a second. That's why when you see these articles from the media, like we were saying, it's really important to talk to, hey, you can reach out to us, reach out to your realtor, and just get some context of what that means. If you're looking at those number of sales compared to April, well, of course, we were all sitting at home. Nobody was doing anything. Nothing was trading.
Agreed.
So to figure out why that number is so big is very important to figure out whether you want to buy, want to sell, whatever.
I agree.
So
I agree. So diving into that just a little bit more, this is what we're talking about, some context. So if we break down and we show the different bandwidths, different price ranges for different housing types, so you've got detached, you've got condos, then we have semis and townhouses. What you can see is when we compare April of 2021 to April 2020, it was like April 2020, everything was on pause. April 2021, everything is quite hot. And you can see that there's been huge increases across all housing categories. But here what we've done is we've compared it to April 2019, April 2018. And what you can start to pull out of these numbers here is look at where the majority of sales are happening in larger, like bigger homes, right?
Yeah.
If I jump down here to condos, it's like the number of sales that happened between 750 to 1 or 2.5 million was a huge increase. But looking back to that comparison in these same categories to 2019, 2 years ago, in 2018, you can see that most of the sales happen in that 750 to million, $1 million, $1.5 million range. And that's because people want more space. No big surprises there. And the investors that jump back in, they jump back in 2, 3 months ago, 4 months ago, and scooped up properties, and right now are kind of accepting the lower rents. So I'm going to skip over all the monthly statistics and the graphs, and we're going to jump down to new listings. New listings are up. When we look at the 3, 5, and 10-year average, they're also up, but up at a more reasonable pace. And then when we get to active listings, months of inventory, we're talking about, how much is available for sale at the end of any given month, and how does it compare to this time in previous years? So again, omitting or ignoring, if you will, last year's statistics and looking at the 3, 5, and 10-year averages for the month of April, you can see that what I'm pulling out of here and what I've contrasted, I put the number of sales in red for that specific year for the month of April versus the highlighted portions, which are the amount of active inventory, the increase or the decrease in active inventory for that same period of time. The bottom line is number of sales continues to outpace the supply of homes in every category. Because of that, you are going to see continued pressure, upward pressure on pricing. And what's of particular interest is detached home sales. The 5-year average for this time, we're down over the 5-year average, what we normally see. Over the 10-year average, we're down 21%. That's a lot. A 13% increase in the number of sales and a 21% decrease in the supply. That's why we continue to see bidding wars on desirable detached homes. And looking here at condos, most people would think, over the last 10 years, oh, there's been so many more condos that come to market. There's way more now than there's ever been. Well, actually, the 10-year average for this month, for the month of April, we're down 13%. And we're up 56% in terms of the number of sales, which is why you're still seeing properties move. And oh, I'm just moving my moving the wrong thing here, so I'm going to try and scroll this back. Well, let me scroll down while I'm trying to fix that to the months of supply, months of inventory. So what's surprising to me is not how quickly we went up. Christian, you and I talked about this. I think what we saw this happening. This is the 12-month rolling supply. We expected, or at least I expected, to get up a little bit higher here and to plateau and then slowly start to come back down. I did not anticipate the roller coaster ride up would be as fast as it did, or as fast as it seems to be coming down. With the other low-rise segments, I didn't think we anticipated any change, because right now this pandemic has been a shift in attitudes. It's been a shift in what people want more than ever. Now, in the last year, if you're willing to live in a $2, $3, $5 million condo, you might say, you know what, I think I'd actually prefer a house. I'd prefer a yard. I don't want to be taking an elevator. Those attitudes are shifting back to what we saw before, because there's been all sorts of statistics and articles about how people, this work from home idealist, romanticized idea, it's not as great as I think everybody thinks it is. It's nice to be able to work from home, but I'll tell you, I would love to just see people on the regular again. And I know I will be doing that more so than we're doing now. And for people who work in an office, y'all are going to go back, not full time, but maybe 2 days a week or 3 days a week. So you definitely can get a bigger house in Peterborough, or, and I'm not picking on Peterborough or Oshawa or Brampton or anywhere. We know you get a bigger house for the same price, but the commute downtown is going to be atrocious when it happens again, and if you have to come back down. So this balanced market, this is the single month supply inventory. I think what I want to zoom in on here, really, if I can, is, I don't think my computer's not going to let me, but what you'll see is we're actually increasing just a hint here. So to go from 1 month of supply of condos to 1.2 months of supply, remember, that's a 20% increase. And for a lot of people, that's a big shock. And I think the big shock is sellers' expectations. If you bought real estate in Toronto 3, 4, 5 years ago, in some cases even 18, 24 months ago, pre-pandemic, you've done well. But if your expectations are up here because you read a Toronto Life article about somebody who had a 300 square foot condo that sold for $875,000 with 47 offers, and it's like, there are always exceptions to the rule, but chances are the money that you made, even without that outlier of a sale, is still very, very good. But the bananas, the market mania that we were experiencing, that happened 6 weeks ago.
Yeah.
It's still busy, but it's not the insatiable absolute fear that it was. And those changes, when the average consumer is hearing about them, if you're not hearing about it from your realtor and you're reading about it in the paper, you're too late. And that applies on the way up and it applies on the way down. So I think right now, it's not that you're too late. It's just that if you were hoping for 77 offers, and a $3 million sale over your list price, that window might have come and gone. You're still going to get a great sale price, but it might have come.
I agree. You're still going to get a great price, but I think it's going to be a price that kind of makes sense. If we think back to February and early March, when there was 10, 15 offers, I mean, that's where the prices become so unreasonable. When you're up against that many offers, it just doesn't make any sense. And you got to remember, we had no comparables back then. This was all new. We had no comps. The comp from November and December didn't really make any sense in February and March. It was kind of a new market. Now we're into May. We have a lot more comps to go off of. People are scared of that 15 offer type of scenario. so they're not all jumping in because the price made no sense. So we're seeing not as many people jumping in, offer totals down. The prices are somewhat more reasonable, not jumping to a price that made no sense 6 weeks ago.
I also think it's important to note that unless you are downsizing or moving out of the city, if prices continued to appreciate at those kind of weekly levels of appreciation, we would have all sorts of problems.
Yeah.
Affordability would have just completely gone down the toilet. And it's kind of like, it's great if you own real estate, you can cash in, but where are you moving to? Like where are you moving?
Yeah.
Right?
Yeah.
You could rent. We all know, we should talk about the rental market really quickly. Rents are down. Rents are going to stay down. We don't have people immigrating here, coming here, which is what we need to absorb those rents. And right now, renters have the upper hand. If you're a well-priced rental, you will rent. Landlords, we have a number, we keep renting out properties. Some are moving, some are not. The ones that are not, frankly, are some of them are overpriced.
Yep.
And now, and even if you're not overpriced, it's not going to necessarily rent in a day. It might take a month. It might take 3 weeks. It might take 6 weeks. So even if you're well priced, I find that tenants are doing a lot more due diligence, and they know that they're in the driver's seat, which is a stark contrast from what we've seen. And I can't get over the new development market. I'm a firm believer in long-term value in Toronto, but there are some great realtors. Actually, John Pasalis made reference, and there was a Twitter thread just today where another colleague, Andrew Lafleur, great realtor, just was commenting between he and his mortgage broker, and it was actually the mortgage broker who's like, Andrew's clients are dripping in cash. And well, you know, the truth is anybody that bought 3-4 years ago, they're all dripping in cash. If you want to say that, I don't even like that term. It doesn't sound very nice. You've done well. It's a combination of luck. It's a combination of, you know, prices that have just kind of spiraled out of control. They've really appreciated over the last few years. And there was a huge population boom too in 2016, 17 in the city of Toronto that drove that. But right now, rents are languishing almost. And I think they're going to continue that way until we can get enough people vaccinated, get people immigrating here in large numbers. And that's not going to happen in a month or 2 or 3. It's probably going to take the better part of another 6 months.
Yeah, I think so.
New development condos, when I hear people buying at like $1,800 a square foot or $1,600 a square foot, I'm like, if you're going to buy and hang on to this for the next 15 years,
Yeah.
wow. But if you're buying in at $1,600, $1,700 a square foot in King West and thinking that for your average condo, for something truly unique, I mean, for instance, we have a penthouse we're going to put up that has a pool and a complete oasis, a private oasis on its own terrace. Yes, $1,800, $1,900 a square foot is not unusual for that. But when you're buying a 300 square foot unit or a 500 square foot unit and paying $1,800 a square foot, paying $900,000, the average Canadian, the average Torontonian cannot afford to buy that. And more importantly, this is just my opinion, the average Torontonian who is buying a $900,000 condo probably doesn't want today in 2021 a 500 square foot condo. No, they want bigger space because they can get a much bigger space for 900 grand.
Yeah, so, I'm the same with you. I never understand when they were, you know, the resale and the new pre-construction markets were somewhat closer together. I could understand it, but with such a huge gap now, I mean, if you're an end user, why not just get more for your money, get into a space that makes sense, that's bigger. It's not going to be new, but you know exactly what you're walking into. You can go, you can feel the space, you can see if it works for you. I mean, to get to gamble on the prices getting up to $1,700-1,800 bucks square foot in the next few years, that's a huge gamble. That's a huge gamble.
And just using your previous experience as the only determining factor for what you anticipate to happen in the future without looking at some fundamentals, or even just trying to consider how the city might grow or how it might not grow, I think is dangerous. I think it's reckless. And I know there's a number of developments that we're talking about specifically. We're not going to air them here. You're happy to tell you what they are. But I just think it's a very slippery slope to be using, oh, well, I did this, 5 years ago and I thought prices were expensive then. And well, it's the same now. I'm like, are you looking at population growth? Are you looking at average salaries, incomes? Are you looking at, rents, are you looking at these numbers? Because some developments, again, some are good. A lot of developments that frankly, I think are overpriced. So I think
Yeah.
you have to be careful, and you also have to think about what's your end game. Because if you're just using this to park and you don't, I don't want to say you don't care, but if you're somewhat indifferent as to what happens over the next 5, 6, 7 years, fine. But if you think you might be cashing in over the next 5 to 7 years, just be maybe mindful of paying $500 a square foot more than what the market value in that neighborhood can currently trade for. So anyway, I think we've rambled on long enough. As always, it's lovely to see you virtually.
You too.
We catch
You
up.
too.
Look forward to seeing everyone, every single person. I promise when it's safe, we're going to throw a raging party.
Oh yeah.
You have to, everyone will be vaccinated and everyone can come and it'll be awesome. We'll put random objects on the ground because it won't matter, right?
It'll be off the hook, as the kids say. Or is that like 5 years ago? Off the hook? Dope. That's probably 15 years ago.
Anyway, as always, wonderful. We have so many new listings in the works. We're very, very excited. 1 bedrooms, 2 bedrooms, 3 bedrooms, 4 bedroom houses, condos, you name it. They're all coming up. So if you have any questions, reach out to us. Otherwise, stay safe. Talk to you next month.
See ya.